All right, guys, start the week highlight. A lot of COVID concerns. Friday, big capitulation down because of not wanting one of the elements, not wanting to go into the weekend long, not knowing what the releases are going to be from Texas, Florida, and some other states. They weren't good. Market comes in, makes a lower low, but opens up slightly above unchanged, right? There weren't a lot of people bearish. There were nobody bullish. A lot of people were neutral in the poll, which is normal. Now we have a run at the overnight low. And so a couple things happen. You didn't make an overnight low in the S&P, but you did in the NASDAQ. We were able to determine NASDAQ was slightly weaker. But that doesn't mean the S&P isn't going to go and make a lower low. You're just trying to build a scenario for a failure of the low, and a couple of things that happened down there. First off, you had this being the look of it down here. This was the failure of the low about 30 minutes or so into the open, where you go and you attack it right in here, all in here after 8:30. All right, downside was the right side. And then you started having a long consolidation, which gets people to start thinking. And you know that at the point. And you could still continue the weakness and you go down another 100 points. Who knows? But a couple of things that you get a quick return back up in here, and then you get a failure, and then it re-rallies. Now, that's easy to see because it's already happened. How do you determine that when you're in this real-time analysis? How do you know this is going to look like a failure? How do you know that this is going to be the next move, which is clearly to the upside, and then this became a reversal of a failure of the low? You don't know, but you try to stack probabilities. So a couple of things that happen down here on the lows. First off, the NASDAQ, which was catching a beating, was going down much easier than it was going up. So you had to keep an eye on the NASDAQ. You're not going to get anything in calling a reversal here in the S&Ps unless the NASDAQ started cooperating and pissed off some shorts in that market. Anytime you look for a reversal, you try to get the other side mad. In this case, you get the shorts mad and nervous at some point with a quick move back up. Now, if you look at a couple things, you get a pretty quick move in here to makes lower lows. But then it doesn't take much time to take back that. Then the same thing happens in here. You get a quick move down, and it doesn't take long to take that back. What was key for me is this area had buy stops above it. And I told people, you got to be very careful being and staying short above that yellow line, which happened to be around 96 even in the S&P, way before any of this happened. Because any of this happens, it's too late. And so it wasn't, look at me, great call. You still need something else to time this or overlap it with. You begin to see when this is buy stops above, you begin to see this as a failure when you're back in there. This potentially could be the failure. Here's the move lower. Here's the potential failure. Everything is a probability. Everything is potentially that. And you got to know where you're wrong before you enter to help manage that risk. But you're building a scenario that not that you're going to go up this much or that much or that much and make new highs, but you begin to tell or create the story that the upside is the right side. That's all. That's where every good bullish opinion starts, to build out the scenario that the upside might be the right side. And one thing that I wrote down, because there's always a better way to say the same thing, to really give people light bulb moments. If I'm right calling a reversal, it's because a lot of others are wrong. And that goes for anything in price movement. If you're right to the tune of a lot, it's because on the way up, you get a lot of people who are wrong. To be real right, you need a lot of wrongs. To be, I'm going to really destroy grammar. But to be a lot right, you need a lot wrong. To be and have a good upside opinion, you need to jam through a lot of people doing what? Getting short. And what are people who get short? Well, they're bearish, right? They think the market's going to go down, so they become bearish. And then after a lot of people get short, they become what? Buyers. They want to buy it much lower But if it doesn't go lower, they're still buyers, and it helps become a self-fulfilling prophecy. You know, the reason why you had 26s taking the top off and you had a potential higher low and all that stuff to call this, and then you got through some resistance pretty easily. But before all that, you had a market that got weak. So you had a lot of people seeing this move here and thinking, I got to get short. So they sell up, they sell rallies, they sell rallies. It's okay to sell rallies. It's okay to get bearish because you see that move lower. It's not okay to still be bearish here and here and here only because you were bearish here or bearish there. At some point, you got to change your mind. You got to know who maybe took control from the other side. You're going to manage your risk. But most people aren't good at that. That's what's important about being a pro and staying a pro. To know that the weakness of people, whether it's their system, whether it's automated, whether it's themselves and it's discretionary, is we suck as humans being wrong. Humans and being wrong do not mix. And so when you get an opinion that's bearish and you're getting people, you know, you're getting them stuck, and you had this and you had this and you build a scenario. Now, what I think was one of the more important features in here, I can't show you because it's on a screen share that I don't adjust, but you had a lot of longs puke in this area, which finally means the longs who've been fighting this move lower finally said uncle. And when you finally get longs to say uncle, what do you have? Less longs, less sellers. Never forget that. Less longs, less sellers. Less sellers, it's an easier path to go up. But let me show you a very important part of this puzzle, and that was our friend, the NASDAQ. Around the same time, a little before 9 o'clock, let me draw this chart back. You could see the NASDAQ have a nice capitulation to make lower lows in here, all right? And then they had a nice drop right in here. And we talked about the buy stops that were above this area. See all these swing highs? Look at them all. So all the shorts, I think, and we thought were going to puke and capitulate above that yellow line based on this consolidation box, based on all these swing highs that kept failing. And what other people say is great resistance up there. So they try to sell it. Well, then they start to say, I don't understand. If I had sold it there, it would have worked. If I'd have sold it there, it would have worked. If I'd have sold it there, it would have worked. Sold it there, it would have worked. Sold it there, it would have worked. But I sell it here and it doesn't work. Well, that's why. Or that helps be the reason why it didn't work. If a lot of people sold it in here, it wouldn't have worked either. So you get people stuck on seeing what already happened to predict what's going to happen. And so the more something's a resistance area, the less it's going to be a resistance area. And so you tie, now you're just tying the NASDAQ into an S&P opinion. All right. Remember what I said? You had a big capitulation down right here. Well, it couldn't come back all the way. When it finally took back where it got fast down to the downside or back to the downside, and you had all these swing highs in jeopardy. All right. And then you see all these little rotations in here. To be short and be surprised that it popped in your face would be not recognizing this context. And the fact that they make a low there and they make a lower low there, and they took out this low right there, and then they take out this low or pretty close to it right there, and yet the ES was showing what? Strength. Well, how could you say it's showing strength, Anthony? It was really weak. It's showing strength versus something, and that's what's important about trading. In order to know that someone's good looking, you got to have some ugly people. So you have to compare and contrast something to something else to find value, right? So if you got the ES, you'll say, yeah, the ES is weak. It's down 20 points since the open, but compared to the NASDAQ, it's showing some potential strength. And I'll show my arm in a second. Like Popeye. Showing some strength with not making a lower low down in here. And it's just building a scenario. And then we use our puke tool to take that opinion. If the opinion's this circle, the execution in the puke tool is that circle, and the overlap is where your success is going to lie, where your success slash consistency slash confidence comes from. You know, in some order, those three words have to happen: consistence to confidence to success. Some success could lead to more consistency to lead to confidence. You can mix them up, but you got to recognize some consistency in what creates an opinion than what executes the opinion. And then where you're wrong, more importantly, is more important than where you're right. You know, I got a 9-year-old son that could tell me where he's right. Tell me when he's wrong and where he's wrong, and not go cry to mommy when you're wrong is the difference, because we're all going to be wrong trading. But this was a setup for the market. Didn't have anybody bullish. It had more people neutral. It got people bearish with the move lower in the first 20 minutes. And then as it started to reverse, it became a self-fulfilling prophecy because it had everybody stuck in here. And there was a moment to call that down in here without having to get beaten up all the way down, saying that here's the low, here's the low, here's the low, here's the low. Finally got it. No, you want to compare some things and just find out when you're trying to find a bottom, where could the buy stops be? And buy stops are always tied to shorts getting mad and getting that face, that fearful face. And they've been happy the whole way down, but if you could start identifying buy stops, is then when you could start identifying the image of shorts looking like this. They don't look like that when the market's doing this and going straight down, right? The longs look like that. You got to find those expressions and not be one of them. That's about being objective. You know, what you want to happen and what is happening can be and often will be two different things. So be aware of that. I went on a little longer with this highlight because there's a lot of important stuff here as far as just, you know, reversals, being really bearish for the right reasons, turning around for the right reasons. You know, Florida came in with a number that wasn't as bad as people might have thought, 3.7% versus 5.3%. But that's just one day. Is it the second wave? Are we getting on top of this second wave? Are we more equipped to get on top of it? We did it once. Can we do it again? The market's going to tell you that stuff before the idiot people on TV are going to tell you that stuff. I'm not trying to predict too far ahead of time, trying to predict during real time. If you look at this price, yeah, we reversed and we bounced off the lows pretty well. But look at in context of the beating 2 Thursdays ago we got. Sure, this could be a day session low versus that guy. You know, we're still in this range from those 2 or 3 days that they beat it down because some of the states that reopened back in here was when they priced in another wave. But then you look in this context, it's still weak. If you look at it in context of this whole picture, you could see that we're in a better spot to re-rally and get back to and through where we were. And that all makes sense because we're in a better spot to deal with the second wave in June, July than we were February, March, April. There's less uncertainty. There's better treatments. There's better preparation with hospitals, with plan Bs and plan Cs. So the market will think about things and they don't care who they offend. The market does not care who it offends. Either your position or your ideology. It does not care. All it cares about is economic strength, and the faster we could get to being normal, faster we will go up to and through where we started. We did that in the NASDAQ. They haven't done it in the ES or the Dow yet. And this is the second wave in the market, pricing in that second wave. Keep yourself safe. Like I said to you, when this entire pandemic and lockdown started in March, back in early March, don't believe the fear mongers or the happy talk. The truth lies in the middle, and you're going to see it happen in markets before you see it on TV. Stay safe. We'll see everybody tomorrow.